Hello and welcome. So we're going to be talking about the global trade landscape, supply chain disruptions, and how these types of issues link to sort of initial illicit financial flows and money laundering risks.
When you don't know what the trade really should be at this exact moment, it's difficult to know if somebody's taking advantage of it. An example is I was in the US about 2 or 3 months ago, and normally when you're in the US, when you're watching sports, it was the beginning of the NBA playoffs. So we're watching the NBA playoffs. Normally, every commercial break, there's 2 to 3 commercials about cars. Are you buying the most up-to-date Ford? Have you seen our deals on Chevys? There were no commercials about cars because there were no cars to sell. There was a total disruption in trade there. And then it sort of hit home when my wife inherited her father's 2006 Prius. It was an old car. It was kind of beat up, probably had 70, 80,000 miles on it. It wasn't a particularly valuable car, right? And so when they went to the car wash to get it washed before she started to drive it back home, they offered her $10,000-$15,000, I think, for that car. That car's probably worth $3,000, maybe. But because of this disruption, first in new cars, and then because of new cars and used cars, there's a huge dislocation there in trade. And so everything becomes more valuable. Now, obviously, my wife is not in the money laundering trade. I want to be very clear about that up front, nor was her father. But when you look at that price and you think about it, you say, okay, well, if I want to take advantage of this dislocation, probably worth 3,000, could probably sell it for 15 right now. I'm going to sell it for 20, and then that will help me move money around illicitly. Right? And you can change the prices because of that dislocation. Obviously, because of now the war in Ukraine, the spikes in commodity prices, and I know we're going to talk a bit about that in a minute, in oil, in foods, in all of these goods that we use, the commodities that we use, this creates the opportunity for, people who are looking to launder money, people who are looking to use trade to launder money. It creates the opportunity for them to take advantage of the situation because it's difficult to find money laundering and trade on a normal day, but during a dislocation like this, it becomes incredibly difficult.
Yeah, similar to Doug. Interestingly, I sit next to a financial restructuring and insolvency team at my law firm, so I'm in the risk advisory team, but they're particularly seeing greater issues around cost of living. So that's having a huge impact. Then, of course, the economic downturn, and Doug's example of that, interesting in terms of how you then have those changes in terms of price and those fluctuations. And probably the other thing that we see at the moment is just the complexity of sanctions. So a number of jurisdictions throughout the globe, but also in Asia, imposing sanctions in relation to Russia. We heard in the last panel a really good discussion about that. We see that sort of impacting both the kind of volume of regulatory issues to deal with, which is impacting trade, but it will also just even the sheer complexity of how to deal with that. So probably those are the main things we see at the moment, and that just seems to be increasing in terms of its both its frequency and its urgency.
Yeah, I mean, look, excellent points by Douglas and Jeremy. I guess I need to stress we repivot that with the fact that after a lot of customers for financial service providers, after being struggling for 7-8 quarters now, the fact of the matter is in many ways businesses has opened up and you're now exploring new markets. So from a bank point of view, how do you kind of find that right balance between facilitating and helping their business, but yet at the same time ensuring that you're doing absolutely what's right in terms of your due diligence? And it's not easy. I think the other kind of angle which we'll probably touch later is that over the last, I guess, 2 years, and I'm not sure it's actually related to COVID at all, but we've actually seen the whole ESG sustainability piece come in a big sort of way.
The other part that we see is moving to more unregulated markets. So as you say, the issues creates more fraud, creates more financial crime. So do you move to those markets which are more unregulated? One example of that, sanctions evasion. potentially through cryptocurrency. So again, we're seeing the criminals potentially look at those and say, let's do it where the kind of less view is in terms of, the bank or financial institution or other oversight of regulated entities. So that's probably been, caused by that dislocation, but also increasing changes to technology.
And I think just one more thing, I think just added on to, what Doug said about car prices. I mean, it's not just goods, right? Services also are kind of going through the roof. At the end of the day, if you wanted to track freight or if you just wanted to track travel airfare for individuals, right? I mean, in the past, if somebody put in an invoice for a $15,000 economy ticket, from Asia to Europe, 10 red flags would go up. But today, that's a fact. Matter of fact is today, some people are actually paying for that. So, how do you kind of look at that and filter it?